On February 28, 2026, the world changed. While most people were asleep, the United States and Israel launched a joint military operation against Iran. The strikes were confirmed by the U.S. Department of Defense. Within hours, the Supreme Leader of Iran, Ayatollah Khamenei, was reported killed by Iranian state media. Financial markets did not wait for Monday morning. Gold hit $5,199 per ounce. Silver surged 7.67% in a single night. Defense stocks exploded higher, and most investors had no idea what was coming or what to do about it. This is not a drill. This is not a prediction. This is happening right now. And the question that will define your financial future is simple. Are you on the right side of history or the wrong one? This crisis did not begin on February 28th. It began months ago, and the smart money saw it coming. In December 2025, Iran's economy imploded. The Iranian rial became virtually worthless. Protests erupted across all 31 Iranian provinces, the largest civil unrest the country had seen since the 1979 revolution. The government shut down the internet. Human Rights Watch documented killings of protesters in the streets. The Iranian government's own figures acknowledged 3,117 deaths. Independent human rights counts placed the number at 6,126. On January 13, 2026, Donald Trump made a public statement. Help is on its way. In late January, the United States began the largest military buildup in the Middle East since the 2003 Iraq invasion. 2 aircraft carrier groups were deployed, including the USS Gerald R. Ford. February 28th, Operation Epic Fury was launched. Iran's Supreme Leader, Defense Minister, Army Chief, and Revolutionary Guard Commander were all killed. This was not a targeted strike. This was a regime decapitation operation, and the global financial markets responded immediately. Let's talk facts. No speculation, no hype. Just data. Precious metals, gold spot price, $5,275.80 per ounce. Intraday high, 5,299 silver COMEX futures, 94.30 per ounce, up 7.67% in one single session. India domestic gold, Rs 1,64,000 per 10 grams, a single day jump of Rs 3,160. Oil and energy, Brent crude closed at 72.48 per barrel. Barclays analysts warned Brent could hit $100 per barrel on Monday open, according to EIA 2024 data. Approximately 20 million barrels of oil transit the Strait of Hormuz every single day. That is 20% of all global oil demand. Defense stocks. RTX Corporation secured a Pentagon 7-year contract on February 4, 2026. For Tomahawk cruise missiles and AMRAAM production ramp-up. RTX order backlog, $251 billion. Lockheed Martin secured a $9.8 billion PAC-3 interceptor contract in September 2025, the largest in its Missiles and Fire Control Division history. Northrop Grumman backlog, $95.7 billion proposed U.S. 2027 defense budget, $1.5 trillion. These are not opinions. These are public market facts. Here is the number that should make every investor stop and think. 20 million barrels of oil transit the Strait of Hormuz every single day. That is 20% of all global oil consumption, flowing through a waterway just 33 miles wide at its narrowest point. After the strikes, Iran's Revolutionary Guard issued radio warnings to vessels. Transit is banned. Several major oil trading houses immediately paused Hormuz shipments. Bob McNally, who served as the White House energy advisor under President George W. Bush, said it plainly. A prolonged closure of the Strait of Hormuz is a guaranteed global recession. One analyst went further. This could present a scenario 3 times the severity of the Arab oil embargo and the Iranian Revolution in the 1970s. India imports nearly half of its crude oil through the Strait of Hormuz. Pakistan faces the same exposure. Any nation whose supply chain depends on Middle Eastern energy is now directly in the line of fire. This is not a regional conflict. This is a global economic event. Before we talk about what comes next, let's look at what history tells us, because this exact pattern has repeated itself every single time. 1973. Arab oil embargo. Oil prices quadrupled. Investors without commodity exposure lost generational wealth. Those positioned in gold and energy came out ahead. The lesson was permanent. 1990. Gulf War. Oil doubled within months. Gold surged. Defense contracts exploded. Portfolios heavy in equities were devastated. Diversified, positioned investors saw life-changing returns. 2003, Iraq invasion. Defense stocks entered a multi-year bull market. Lockheed Martin, Raytheon, Northrop all surged. The investors who understood the defense spending cycle profited enormously. June 13, 2025, Iran-Israel escalation. On confirmed strike news, gold jumped 1.3% to $3,435. Brent crude surged 10% in a single day. LMT, RTX, and LHX each gained 5% in one session. February 28, 2026 is bigger than all of those. This is regime change. This is nuclear program destruction. The financial consequences will be proportionally larger. The pattern is not a coincidence. It is a law. Every major crisis creates exactly two groups of people. The first group is the majority. They are reactive. They watch the news, panic, sell at the bottom, and spend years trying to recover losses they never needed to take. These are not bad people. They are simply unprepared. The second group is a minority. They understand that geopolitical events follow patterns. They read the data before the headlines arrive. They are already positioned. When the crisis hits, they do not panic. They profit. The difference between these two groups is not luck. It is not insider information. It is preparation, education, and the discipline to act on data instead of fear. You are watching this because you want to belong to the second group. So let's talk about exactly what smart money is watching right now. This is education, not financial advice. Everything below is based entirely on public market data. 1. Physical gold and silver. Gold is already in record territory above $5,200. Analysts are citing $6,000 as the next major resistance level if Hormuz tensions persist. Silver at $94 has outperformed on a percentage basis because silver is both a safe haven asset and an industrial metal with a 5-year consecutive supply deficit. The critical distinction: physical silver and gold, not paper ETFs. ETFs track price, but carry counterparty risk. In a genuine crisis, physical possession is what matters. 2. Defense sector. RTX Corporation carries a $251 billion backlog. Lockheed Martin just secured the largest contract in its missiles and fire control division history, $9.8 billion for PAC-3 interceptors. The proposed U.S. 2027 defense budget is $1.5 trillion. Here is the key insight most people miss. Munitions replenishment cycles are multi-year. Whether a conflict lasts weeks or years, these companies have locked in government contracts that do not disappear when the headlines fade. 3. Energy. A prolonged Hormuz disruption is the most bullish possible scenario for oil producers operating outside the Gulf. Barclays is already modeling Brent at 100+. At that price level, non-Gulf energy companies generate exceptional margin expansion. The Trump administration has the Strategic Petroleum Reserve as a short-term tool, but it is not a structural solution. 4. Cash and timing. History shows a counterintuitive pattern. In the initial hours of a geopolitical shock, institutional investors sometimes sell gold to cover equity margin calls. This creates brief dips in precious metals, which experienced investors treat as entry points, not exit signals. Liquidity before a crisis is not fear, it is strategy. Let me leave you with this. Every generation faces a moment that separates those who were prepared from those who were not. 1973, 1990, 2008. Each of those events, in hindsight, was entirely readable by those who chose to look. The U.S.-Iran crisis is not a surprise to people who study markets, geopolitics, and history. The military buildup was visible. The economic collapse inside Iran was documented in December 2025. The trajectory was clear months before February 28. Wealth is not destroyed by crises. It is transferred from the unprepared to the prepared. The investors who will look back at this moment with pride are not the ones who had perfect information. They are the ones who respected the data, understood the patterns, and had the courage to act before it became obvious to everyone else. That investor can be you. Stay informed, stay positioned, stay ahead.